Hey everyone, and welcome to the PivotBoss Closing Report for April 4th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis after the recent session. Obviously, price pushed to new highs here beyond the 2061s. We talked about 2061 being an important area, but how price could likely even push beyond that zone into 2077.5 and beyond. Right now, anytime you see a situation where price goes from a significantly undervalued area and rejection and climbs back to an area of acceptance, you usually see price trade back and forth and auction above and below that acceptance level. So it's not going to be out of the question that we see more gyration out of this zone. Obviously, as long as price remains above 2000 and 2009 here, continued overall strength should be seen. I think below that zone will start to change the tide to the downside, in which case we'll have to see, again, if prices can't hold 2,000, the next HVN would be 1912.5. So right now the expectation would be for a trading range to start to develop on these highs. And right now, continued strength should be seen. So buying the dips is still advisable until proven otherwise. Now, if we take a look at the ES on an intraday time frame here, we had an impulse range that formed from 71.5 down to 61, midpoint at 66.25, and price kind of traded based off that range a bit and closed below it. So that opens the door to seeing a further pullback into a completion of that expansion at 20.50.5. Additionally, any drop into that zone could be seen as an area where bulls come in and defend and take price higher within the 5-day volume profile. Overall, prices right now holding below the previous month's high, 64.5, and the previous week's close, 65.5. That opens up a big test at 53 here. 53 is going to be very important here. Failure to hold that level opens up a move back into the 2030s. Now, if we take a look at crude oil, here's crude oil. Something that we talked about Friday during our PivotBoss Hangout was how prices here went auctioned through 37.50 and also that 37.65 LVN. I mentioned any pullback into this low could offer a selling opportunity for a continuation into 37.15. And so far, price came into that zone but didn't quite hit it. Actually fell shy of that area. I was watching this area very closely, but it never got into it. Instead, prices failed to hold above 36 and kind of the downside price continuation ensued. I would say right now, it's a high odds that we test between 34.91 and 35.17 with a shot at seeing a push into the primary bear target for the week at 34.06. Now, if we take a look at the intraday time frame, you'll see what I mean here. Early on during the session, what we talked about was how these bears down here were trapped and how bulls were defending here. And the likely continuation would take you into 37.50 to 65. At which point bears would likely come in and defend for a shot at seeing a push lower. Prices were defended here at the 36.55 level on multiple occasions, but price only got as high as 37.21 before seeing a big time push lower of nearly 1.5 points or so. So a nice continuation to the downside. 36s is going to be very important right there, back above that level, could push this thing right back to 37. Failure to see acceptance back above that zone implies a continuation to the downside. Right now, with the current sell-off, we could be looking at a primary weekly bear target again at 34.06. All right, taking a look here at gold. Here's a look at gold. This is what I talked about before. Right now, we're just holding in a large range here. We've seen lots of rejection above 72s, and that has led to kind of this downward trend on a short-term basis here. Bulls are trying to keep composite VPOC bid 1202.5, and they're also trying to keep the top of the key range bid at 1208.30. So this has been an area that's been bid for some time. That also tells you there's an increased inventory of self-stops below. So if there's a failure to hold 1202.5, the implication would be a big time drop back toward 1100, 1095. So this is a big time area right here where a lot of bulls have continued to defend. If they don't get paid, I think the stops come out back to the next HVN below 1095. Holding this zone could get you another rotation back into 1265 with a shot at retesting rejection above those zones. All right, looking at the NQ here, NQ has seen a steady continuation to the upside. One thing we saw was a fade off of the previous week's high price right here, basically the 20s, 45.20s. Price got above that area and saw an early pullback. I would say a pullback as low as the 44.40s could see a buying opportunity for a continuation into the upside weekly bull target. Otherwise, failure to hold above this 44.40 opens up a big time retest at 43.55. Given the current uptrending market, buying the dips is still the primary objective. I would say that changes or shifts upon a push below 44.40 and especially below 43.55, as that could open up a move back toward 40.76. On an intraday basis, looking at the NQ here, basically what you see is price when offered off of the previous week's high price, so everything above 45.29, everything above that level offered, and then the day's open price offered a few times back down. So all of this rejection implies at least a test back at 5-day VPOC 44.81 with a likely rotation below value. Anything in this area could be a short-term buying opportunity for a push up. All right, that's it for now. Let's see how this thing plays out heading into the rest of the week. Good luck and trade well.